It's now time for our analyst segment, and joining us tonight is Fund Sales and Service Manager at JMMB, Tanika Lawrence. Welcome, Tanika.
Hi, Kalila. Good night, everyone.
All right, so tonight we're talking about retirement planning again, and we've talked about this topic a couple of times this year. But for those who may have missed our previous conversations, what are some of the benefits of retirement planning?
All right, so we're reminding you to plan for your retirement because of these main benefits. One, it guarantees you income when you stop working. It allows you to hedge against the inflation rate favorably. And if you're listening to Barrington's presentation earlier, where he's talking about the increase in goods and services, investing in a retirement fund is one way to protect your money against the inflation rate. It also gives you the tax-free advantages. So if you start early, you can customize your plan, contribute from your salary, and benefit from tax-free contributions and tax-free interest earnings.
Oh, okay. So we're not just looking at pension planning for yourself and for when you retire, but we're also looking at possibly investing in retirement plans, you said.
Yes, it is an investment account. So approved retirement plans, they're invested based on your risk appetite. So you can customize. Usually in terms of customizing your retirement plan, you start off more aggressive when you're younger because you're encouraged to take more risk with your investment, put more of your money in stocks so you can benefit from the long-term gains on stocks and the uptick in the equities market over the long term. When you're closer to retirement, you can be a little bit more conservative by investing in bonds, but your approved retirement plan is a managed portfolio. So you can choose to customize it, but it's also one of those plans that you have the expertise of the investment managers on your side.
Now, for individuals, it's a no-brainer. Like, obviously, if you have the opportunity to invest in a retirement plan, do so because you're protecting your future self. But for companies, what is the benefit of offering this package to employees? Because it does come at a cost to you as a company.
So there are two types of pension plans that are offered by companies. There's a superannuation plan that does come at an expense to the company because you're setting up your own fund based on your trust deed and rules and your own board of trustees. There's also the corporate retirement account, which comes at no expense to the company. And any member of the company that's eligible, the company can decide on what eligibility requirements would apply, but it comes at no expense and it encourages the employees of that company to contribute on that single pension account. It also
So
gives them the tax-free advantage,
for the employees.
the employees as well as the company. So if the
Oh.
employer decides to contribute, they also benefit from the tax exemption on contributions.
Ah, I see. So how does a company set up their pension plan? Like, what are the steps involved?
All right, so it's pretty simple. It requires the company's certificate of incorporation, the business TRN, completion of the client information form, and assign signatories to the account. Once the company establishes that corporate retirement plan, any member of the company can enroll very easy as well. So they wouldn't have to provide all the know your client documents that an individual member would have to complete because the company plan would have already taken care of most of that heavy lifting and also facilitate the salary deduction, which is where employees get that initial tax-free benefit. They get it from the salary deduction. So the contributions come from your salary before taxes to your income. So you're benefiting. That's one of the most important benefits of investing in an approved pension arrangement.
And how do the employees now ensure that they take advantage of this?
So employees can contribute up to a maximum of 20% of your gross annual income. And once you're in a company that offers this pension plan, it's pretty easy to just speak to your HR representative or your assigned officer, your assigned financial advisor on how to enroll in the company plan and start doing the deductions based on your contribution rate. So it's pretty easy. And if you have that available to you under a company, meaning your company would have put that in place for its employees, take advantage of it because you also benefit from the employer's portion as well.
We have a comment, Tanika, that I want you to respond to. This comment comes from Shells, who says, but the money is lost when the employee changes jobs. Most time it's hell to get back your money or get it transferred.
All right. So once you're in an approved pension arrangement, you're entitled to that benefit. Even if you change jobs, that money still belongs to you. So you can reach out to the administrator of your plan. So you would normally know who the administrator is based on your statements or based on the presentations that would have been done. You can reach out to the administrator to have those benefits either transferred to another approved pension arrangement, or if you are eligible, you can purchase a deferred retirement benefit or a deferred annuity. Or if you're at retirement age, you can always purchase an annuity through an insurance company, but you're entitled to that benefit.
Okay, I think I saw another comment here. Yes, Travis wants to know, what retirement plan is there for persons who are working overseas who want to start their own plan?
All right, so if you're working overseas, but you are a Jamaican resident, meaning that you are not a resident of another country, you're still considered to be a Jamaican resident, you can open your own individual retirement account. However, if you live and work overseas, then you may not be eligible to join an approved pension plan in Jamaica because it's ideally set up for residents. However, you can open a retirement supplement account. And with the retirement supplement account, you can decide on, of course, your allocation, your asset allocation, your contribution rate, and you still get tax-free benefits as well on contributions.
Okay, that's good to know. So how does a company, sorry, I asked that already. What are some other available tools to support employees in reaching their retirement goals?
So if you're not sure what that goal is, you can use the retirement calculator. Very easy to use again, and it's accessible to everyone online. And I'm going to share my screen just to show you quickly what that looks like for you. Let me just share screen and show you quickly what it looks like in terms of your online calculator. Now, if you are younger or older, it doesn't matter because this calculator factors in not just your retirement account, but your supplement as well. So you can always put in your age, put in your contribution amount, your salary information, how much you're contributing. Also, you set your goal here as well in terms of what percentage you want to contribute, or you want to, the target are you trying to reach based on your contributions to get the ideal retirement benefit for you. And remember, retirement planning is not a one size shoe fits all. It varies person to person based on what your specific goal is. So you can adjust your rate accordingly based on, of course, the returns of your portfolio. Set it against inflation rate as well. And inflation rate right now is how you track the progress of your pension plan. And especially right now with inflation being at a record low, it is a good time to start investing long term. Take advantage of that to see true benefit of your retirement account. Now, once you put in your variables here in terms of what your goal is, the calculator tells you how much money you will actually have based on your interest earnings in your portfolio and how much you will need based on the goal that you would have set for yourself. And if you were to purchase an annuity with that balance, which is your monthly pension, it tells you what that's projected to be as well in terms of an annual pension and a monthly income from your portfolio. And if there's a shortfall, the calculator also tells you what that shortfall is as well and how you can close that gap. So for instance, if you were contributing, say, an amount that didn't meet your retirement goal and you have a shortfall, the calculator will tell you that, all right, if you contribute an additional amount of 41,500 per month, then that will close the gap in your retirement plan and allow you to hit your retirement goal.
How do people access this tool?
So you can go online to JMMB's hellofuture.jmmb.com and click on the retirement calculator and it takes you directly here.
hellofuture.jmmb.com. Pretty easy to remember. All right, finally, Tanika, before I let you go, what are some of your final tips for retirement planning?
All right, so in terms of final tips, one, look at your income sources. Very important to identify what those sources are going to be when you retire as well, and try to boost them now as much as possible. Maximize your contributions up to the 20% to take full advantage of the tax-free benefits. You should also be looking at debt consolidation as well to reduce your interest rate payments. That's an important factor. Sometimes it often gets overlooked in terms of how much you can save through a debt consolidation in terms of loan payments. If you don't have an emergency plan in place already, very important that you set up an emergency plan. Your retirement account is not an emergency plan. It's usually locked in for retirement, because remember, it is for long-term investing. So you can't just run in and pull that money whenever you have an emergency. To ensure that you have an emergency fund set up for those anything that might come up that requires you to pull a lump sum, right? So you can set up an emergency fund through our bonus saver account as well, which is a good option for emergency fund savings. And also have sufficient insurance coverage, especially if you're close to your retirement age or getting there. Ensure that your insurance coverage is sufficient. All right. And again, and I'm going to stress on this one, maximize your contributions as much as possible to take full advantage of your tax-free benefit and to allow you to beat the inflation rate, so that when we get to retirement age, we can live comfortably and be able to combat those hiking any prices in goods and services.
Last question comes from Michelle Carpenter, who wants to know, what about public sector workers who are already a part of a pension scheme that is below the 20% cap?
That's a good question, Michelle. So if you're already a part of an approved retirement plan with your company, that's awesome. You're already done with the first tier. So you have 3 tiers to your income sources at retirement. You have your NIS benefit, your company pension plan, and your other investments. So if you already have the first 2 down, it's now time to take a deep look at your other investments. And with your other investments, I always recommend that you look for investment. If you're buying in stocks, look for stocks that are dividend paying, or look for bonds that are high yielding long term, or look for investments that also give you tax-free advantages over the long run. But now is the point where you start looking at building out that 3rd tier in your pension plan, which is your other investments.
All right. Thank you so much, Tanika, for those tips. Much appreciated.